That's the scorecard for this morning, and you're set up as we get underway here and about half an hour into trade. What we're looking at as far as the performance, Kevin Green joins me now, and we've got some data hitting the tape right now. These are the business inventories. Just talk us through what you're seeing there, KG.
Yeah, good morning, Sam. We are seeing a slight uptick when it comes to business inventories. Now, this is going to be the month of November. We actually did see an increase of 0.1%. Street was looking for an increase of 0.2%. So actually lower than the Street's expectations, which actually does give maybe a lot of these companies, especially the retailers, maybe some pricing power here in the near term as they kind of work through a little bit of their inventory. The previous print that we actually did see is at 0.2%. So we are seeing a deceleration there. And if you're looking at it from an ex-auto standpoint, retail inventories came in at 0.2%, for the most part in line with the Street's expectations. So not a really big headline surprise there. If you are looking at the inflationary picture, you would like to see business inventories actually moving to the upside, which would actually force a lot of these retailers to move prices to the downside, which could also then lead to lower inflation. But for now, this print is actually not really that surprising. I think the big headline that we had is the retail sales data that we got earlier this morning, which obviously showed a little bit of a different trend than what we have been used to over the last couple of months.
Yeah, many were hoping that would continue to show the strength in the back end of last year with respect to some of the holiday spending. That didn't seem to be the case, as you say. A bit of a disappointing read with a flat performance there for retail sales. The market had been looking at least for a marginal pickup. But I suppose my question is that likely to mute the GDP estimates moving forward? And what does that mean as far as, how much we're pricing in with respect to more Fed rate cuts now?
Yeah, that's a good question. So there's two ways to actually look at this, and I'm a little bit more balanced when it comes to these numbers because they were not great. Definitely when you're kind of looking at every single area, not only the headline retail sales, but also if you're looking at core, even the control group itself, all coming in lower than the Street's expectations. That being said, in the November print, we actually did see an increase of 0.6%, so that really outpaced the seasonal average as well. So once again, they're kind of balancing each other out. Now, if you're looking at the retail control group, which is what is added into the GDP numbers as well as PCE, that came in at a negative 0.1%. Street was looking for a positive 0.4. So Sam, you are correct. We are going to see a readjustment to the downside when it comes to GDP estimates from the Atlanta Fed GDP Now forecast. Probably in the next hour or 2 hours or so, that should actually come in here a tad bit because obviously, once again, a negative number on that retail control group or the control group itself is going to have a negative impact when it comes to GDP. We still are outpacing our average when you're looking at GDP, but a lot of that is coming in because of the export in gold and silver as well as copper this quarter. That has been a net positive when it comes to GDP, and we're not importing as much as we did before the tariffs actually hit as well. So an interesting dynamic when it comes to GDP. It will have an impact to the downside, but while still outpacing what our historical average is, which is around 2%, 2.5%.
Okay, and then of course we are seeing very much the positioning going into what is going to be a very consequential week with respect to the jobs tomorrow and then the CPI on Friday. So we'll be watching. Talk us through some of the earnings. Obviously, we've seen a bit of a disappointment out of Coca-Cola this morning. Explain why, and I suppose I would also couple that with the performance we've seen in consumer staples. I mean, I believe they got off to the strongest start to a year in about 25 years, KG. What does that signal to you? Because obviously we do see these stocks tending to sort of outperform in sort of economic uncertainty of downturns. But what is this telling you right now? And what did Coca-Cola have to say that we're seeing some reaction to the downside this morning?
Yeah, so for the consumer staples, we have to also kind of take a little bit of a look back over the chart over the last 3 years, 4 years or so. Consumer staples have not been able to perform with this market. And so I think there's a little bit of a catch-up trade. Yes, there is probably a little bit of a risk-off type of trade that's taking place as well. And then if you're looking at the concentration of performance, a lot of that is coming from Coca-Cola, Walmart, and for the somewhat Costco here. When you're looking at Coca-Cola's report, they did miss on the top line. Revenue came in at $11.82 billion. Street was looking for over $12 billion at that pace here, and the global unit case volume increased by 1% in Q4 and pretty much flat when you're looking at year-over-year growth. One of the items that you are starting to see is their pricing pressure that they have been able to exert on consumers is starting to wane here a tad bit, and that's also pulling in a lot of the volume. We did see weaker sales in North America as well as the Asia Pacific market, so that's something to be mindful of. But this stock has had a really decent run, so we're down only around 1.5%. given the news that we actually had for today when it comes to their earnings. And their guidance, for the most part, came in just a tad bit light as well. But a 1.5% pullback based on this report, I don't think is a bad thing. The stock has definitely outpaced its moving averages over the last month and a half, 2 months, maybe a little bit outstretched here right now, and maybe a pullback consolidation is worthy and healthy for this name.
Okay, so that's parking the earnings aside there as far as what we got this morning. Let's talk about what else is on the move this morning, KG, and that is crypto, which still can't catch a bid here. We did see a little bit of a recovery on Friday. We continue to pull back now. Interestingly, I was listening to Michael Saylor this morning trying to somewhat reassure the markets, as he does, particularly with respect to his Bitcoin treasury company. He's not going to be selling, but he's also been talking about to the effect of, how traders are perhaps having a bit of a field day with the volatility that we've seen. But over the long term, I mean, it's just only 4 months off the highs here, so it perhaps is nothing to really be alarmed about. What's your read on what we're seeing as far as the price action?
Yeah, I won't go into the fundamentals of Bitcoin. Obviously, the narratives kind of change on it seems like a week-by-week basis or even a year-over-year basis. And so let's just talk about the technicals. We did have a nice hammer candle back on Friday. We did see a push to the upside, hit the resistance level of around $72, $73 or so. Now we are seeing a pullback. If you're a bull, what you would probably like to see is a pullback back to that 64,000 level. Buyers really stepping in, holding that line, and that's where you see a little bit of a reversal higher here. I still look at Bitcoin as a liquidity gauge of the broader market, and if we do see it continue to move to the downside, it's one of the higher beta or higher risk assets in the market. That probably would then lead to maybe some equity volatility in certain pockets, especially software or even technology. So technically speaking, decent hammer on Friday. You'd like to see a check back and then once again kind of ramp up higher, and then you're kind of looking at your 83, 84,000 level as your area of support. If we do see a breakdown, you're looking at around 55,000 as your next major area of support for Bitcoin.
Okay, and just getting across the commodities patch, obviously we've seen this pullback in the dollar. That's got a lot to do with the yen strength coming through post the election, Takaichi trade, some of the jawboning that I also mentioned. But we are seeing gold had been catching a bid. We're seeing red arrows across the board right now. Just talk to us about some of the movements across the commodities patch this morning and what you're paying attention to.
Yeah, gold looks a little bit more healthy than silver at this point in time. I think the economic data that we're going to get on Friday when it comes to inflation is going to be the make or break for a lot of these metals, not only the precious, but also the industrial metals. If I'm looking at copper, I think this is the most interesting metal that's out there from a technical standpoint. We have seen this kind of stay at around the $6 level, but if you're looking at some of the oscillating indexes or indicators at the lower there, you are starting to see maybe a potential cross for that MACD on this weekly chart where that 12 EMA potentially goes below that 26 EMA. I think if that does occur, it would probably be a violent move to the downside, and you're looking at around $4.70, $4.80 as your major area of support. Copper inventories are ramping up at a very aggressive rate, not only for COMEX, but also for the London Metals Exchange. It's a little bit different than when you're looking at silver or gold. So a lot of the inventory is starting to stack up. You are starting to see industrial companies slowing their purchases when it comes to copper as well, and I think that's going to be price destructive here over the next couple of weeks, just based on the technicals as well as the fundamentals. So keep your eye on it. But I don't. Outside of us having a very hot CPI print on Friday, and if it does come in fairly cool, I think that provides a little bit more of a bearish backdrop for the industrial metals right now.
Yeah. Could move the needle as far as some of the metals and commodities across the space, particularly off the back of some of the inflation print that we'll be getting on Friday. KG, really appreciate it. Thanks so much for breaking down some of those numbers and movements for us today.